When it comes to taxes for US nomads and expats living abroad, probably the biggest hack is the Foreign Earned Income Exclusion. This is the provision that allows you to exclude a certain amount of foreign earned income from your federal tax return. For tax year 2025, that amount is set at $130,000. And it is indexed for inflation, so it does tend to increase every year. But in order to be eligible for this tax break, you must meet certain requirements set by the IRS. One way to claim this exclusion, and probably the most common way for digital nomads, is to pass what is called the physical presence test. In this video, we'll review what the physical presence test is, as well as some common misconceptions. But before we do that, make sure you do us a solid, hit that like button. It really helps us out in the YouTube algorithm so we can get this content to more people who really need to see it. So we would appreciate that. Now, without further ado, let's get into the video. The physical presence test is one of two IRS approved ways to qualify for the Foreign Earned Income Exclusion. To pass the physical presence test, a taxpayer must be physically present in one or more foreign countries for at least 330 full days within any consecutive 12-month period. Now, a full day, according to the IRS, is a 24-hour period that starts at midnight. Partial days, travel days, days spent in the US, those do not count toward the 330-day total. Another area that really trips up a lot of people is what the IRS means by a consecutive 12-month period. One important thing to keep in mind is that the 12-month time frame does not have to align with the calendar year, and in fact, it can begin and end on any date. For example, imagine that you moved abroad on March 15th, 2024. If you tried to measure from January 1st through December 31st of that year, you would only have about 9.5 months overseas, which would not give you the full 330 days. Instead, what you could do is choose a period that runs from March 16th, 2024 through March 15th, 2025. Now, in this instance, if you already filed your 2024 tax return, but later realized that you qualified for the physical presence test, what you can do is you can go back and amend your return. You can do this by filing Form 1040X along with Form 2555 to claim the Foreign Earned Income Exclusion. Remember that the physical presence test applies to the tax year in which the income was earned, not the year when you finish meeting those 330 full days. So let's say you moved abroad on June 1st, 2024. In that case, your 330th day abroad would not arrive until April of 2025. Even though you do not complete the test until 2025, the exclusion can still apply to income you earned in 2024 during your qualified foreign stay. You would just need to wait until you meet the 330-day threshold to file or amend your tax return like we described previously. US expats also have the option to request an automatic extension on their tax filing to October 15th, which could allow them enough time to meet that 330-day test before they file. Remember that for the physical presence test, only time spent physically in foreign countries counts. Time spent in international waters, time spent in airspace over international waters, or time in US territories is excluded. Travel between foreign countries generally does count, but if your travel involves more than 24 hours outside foreign territory, such as a layover in the US, then those days are disqualified. There are also some countries, such as Cuba, where days spent do not count toward the physical presence test. That's the rule as of 2025, but US government policy is always shifting around Cuba, so make sure you check the latest updates on that. If you do plan to claim the Foreign Earned Income Exclusion, then you're going to want to maintain really good records. Save all your airline tickets, hotel receipts, credit card statements, anything that shows transactions overseas. If you're still not sure if you qualify, we built a really handy calculator on the Savvy Nomad website that you can use to input all your arrivals and departures. We also have a really great US Expat Tax Calculator to estimate your tax obligations. Link is in the video description for both of those. Now, the other way to qualify for the foreign earned income exclusion is to pass what the IRS calls the bonafide residence test. That's more geared toward expats who live full-time in one single country, and we have more videos on that, so make sure you check those out. Now, if you're looking to save on state income tax in addition to federal income tax, then you're going to want to transfer your domicile to a low-tax US state. Here at Savvy Nomad, we handle all the paperwork and coach you through the process to obtain a real residential address at a low cost. If you're interested, check out the link in the video description. And if you do sign up with us, make sure you use the code YouTube for 15% off. If you enjoyed this video, you want more Nomad and Expat tax tips and financial strategies, follow our channel. We also just launched a weekly newsletter. Check out the link in the video description for the email list. And finally, once again, if you didn't hit that like button, make sure you do that. It costs you nothing, and it really helps us out in the algorithm so we can get this content to more people who really need to see it. Until next time, safe travels and happy tax planning.